I need to end this day with one more. I was reading this one earlier. It's a very short one, so that'll be good for your viewing and hearing pleasure. You don't have to hear me yap for 15 or 20 minutes. But this is important. Again, CBO, Budget Office. What are they saying about our debt problem, our debt growth? They actually have something to say. So this is that hard data that even the most skeptical person, I trust what the news says, well, if you trust what the news says, you should certainly trust the CBO, right? Central Budget Office, whatever the hell it's called. CBO warned, this is Zero Hedge, CBO warns of fiscal catastrophe as a result of exponential debt growth in the U.S. In a just released report from the CBO looking at the long-term U.S. budget outlook, the Budget Office forecasts that both government debt and deficits are expected to soar in the coming 30 years, with GDP, debt to GDP expected to hit 150% by 2047 if the current government spending picture remains unchanged. And as you know, the government always loves to give you the best numbers. So that's the best picture, period. That's the best it can get. And it's not going to be that, because there's always those unforeseen things or these unfunded liabilities I keep talking about, pensions, Medicaid, Medicare, welfare, all this stuff that they don't really include. We don't want to look at that stuff. So this chart, if you'll take a look, Civil War, it's interesting. Federal debt held by the public. Civil War, boom. World War I, boom. Great Depression, boom. World War II, debt, boom. Back down. 90s, a little bit up, back down. Tech bubble burst. Okay, here we go. 2010, crash over here, 2008 and 9. Debt, massive debt spending. Hang on. Put this thing on pure mute. And what do we have here? This is what's projected. But if you look at World War I, you see how fast that shot up? In World War I here, Civil War up here, boom. World War II, boom. And then you look here from 2008 and 9. Look at what happened here. And then it just kind of peters off here just for a second. And here we are again facing the same problems. Do you really think it's going to be this kind of long, drawn-out inclination? No, I think this over here is going to be right here where this line is. Bloop, straight up, baby. Trump. Ride the Trump train straight up. $1 trillion spending project, build the border wall, pay for all kinds of stuff, new Trump care, Ryan care, whatever the hell it ends up being. Because that's the only way this will keep going, is if they spend like they've never spent before. And in 2008-9, when they start raising the debt ceiling, raise it again, the last 8 years, that was spending like we've never spent before. Only to be outdone, possibly, by doing it again now under Trump. Spending now like we've never spent before. When we should not be doing that. There needs to be a serious jubilee, cut it all down, start over, bring prices down, even if you have to set price controls temporarily. Rents, property prices, all this has to come down. Start over. In a just released report from the CBO looking at the long-term U.S. budget outlook, the Budget Office forecasts that both government debt and deficits are expected to soar in the coming 30 years, with debt GDP expected to hit 150% by 2047 if the current government spending picture remains unchanged. And again, I just explained why it's not going to happen that long. Absolutely not. It'll be here, any day now. The CBO's revision from the last 2016 projection shows a marked deterioration in both total debt and budget deficits, with the former increasing by 5% to 146%, while the latter rising by almost 1% from 8.8% of GDP to 9.6% by 2017. So again, revised to make it's a little bit worse. So how many things are going to come out of the closet? How many monkey wrenches are going to be thrown into the plans of these politicians of ours that are going to say, oh, well, we had to readjust that, we had to revise that, we had to revise that, so that we had to revise it so fast and furiously that we said 30 years, we meant 5. We just meant 5. According to the CBO, at 77% of gross domestic product, GDP, federal debt held by the public is now at its highest level since shortly after World War II. If current laws generally remain unchanged, the Congressional Budget Office projects growing budget deficits would boost that debt sharply over the next 30 years. It would reach 150% by 2047. In addition to the booming debts, the office expects the deficit to more than triple from the projected 2.9% of GDP in 2017 to 9.8% in 2047. The deficit at the end of fiscal year 2016 stood at $587 billion. A comparison of government spending and revenues in 2017 versus 2047 shows the following picture, which I don't need to show it right now. The CBO also mentioned rising rates as another key reason for the increasing debt burden. The Federal Reserve has kept rates low since the financial crisis, but is on track to gradually hike rates in the coming year. And again, they're saying this year, 3 to possibly 4 times in 2017. On the growth side, the CBO expects 2% or less GDP growth over the next 3 decades, far below the number proposed by the Trump administration. And in case you're wondering, GDP from 1950 to 1973 was 4%. 1974 to 1990, 3.3%. 1991 to 2001, 3.2%. 2002 to 2016, 1.8. Projected 2017 to 2027, 1.8. 2028 to 2037, 2.0. And 2038 to 2047, 1.9. That's your projection. Like I said, I wish Donald Trump a lot of luck. I want him to be successful. I want growth to continue. I want the economy to boom. But reality isn't tapping on my shoulder. It's punching my face. It is pounding my face, saying there's not a chance in hell that this can happen. The only thing that could happen is we go into even more massive debt to get one final ride off into the sunset of a smidgen of economic growth that lasts even shorter than the last time around. That's about as best that can happen. At worst, we're not even going to get that, and they're going to let this thing crumble under Donald Trump so that you do not elect him again next time in 2020 for what he did to the economy. It was his fault, even though he had nothing to do with it. Trust me. The Budget Office breaks down the primary causes of projected growth in U.S. spending as follows, and not surprisingly, it is all about unsustainable Social Security and healthcare program outlays. Don't need to see the chart. That's all you need to know. Welfare, unfunded liabilities, handouts, which I understand Social Security, we're supposed to have something to retire on. That's why we've been paying in all these years. It's my money and I need it now. The CBO's troubling conclusion: greater chance of a fiscal crisis. A large and continuously growing federal debt will increase the chance of a fiscal crisis in the United States. Specifically, investors might become less willing to finance federal borrowing unless they were compensated with higher returns. If so, interest rates on the federal debt would rise abruptly, dramatically increasing the cost of government borrowing. That increase would reduce the market value of outstanding government securities, and investors could lose money. The resulting losses for mutual funds, pension funds, and insurance companies, banks, and other holders of government debt might be large enough to cause some financial institutions to fail, creating a fiscal crisis. An additional result would be a higher cost for private sector borrowing because uncertainty about the government's responses could reduce confidence in the viability of private sector enterprises. It is impossible for anyone to accurately predict whether or when such a fiscal crisis might occur in the United States. In particular, the debt-to-GDP ratio has no identifiable tipping point to indicate that a crisis is likely or imminent. All else being equal, however, the larger a government's debt, the greater the debt of a fiscal crisis, greater risk of a fiscal crisis. The likelihood of such a crisis also depends on conditions in the economy. Oh, and I guarantee you, all these so-called conditions that they mustered into their little plan, or all these conditions that could happen, are not accounted for. We aren't expecting them, but there are some out there. So where Jason at 4 goes is where he needs to go. Assume that some of those things off left field are going to be coming in. Unexpected. Dow Jones unexpectedly drops today. Stock market drops today unexpectedly. An unexpected rise. Right. Thus, fiscal crises around the world often have begun during recessions and, in turn, have exacerbated them. If a fiscal crisis occurred in the U.S., policymakers would have only limited and unattractive options for responding. The government would need to undertake some combination of 3 approaches: restructure the debt, that is, seek to modify the contractual terms of existing obligations, use monetary policy to raise inflation above expectations, or adopt large and abrupt spending cuts or tax increases, and or both. Then again, as the past 8 years have shown, only debt cures more debt, so expect nothing to change. Also, we find it just a little confusing why the CBO never warned of an imminent fiscal crisis over the past 8 years, when total U.S. debt doubled, increasing by $10 trillion under the previous administration. Isn't that interesting? Now they want to talk about it, though. And I think talk about it they will when we see if Donald Trump's successful with Congress in raising that debt ceiling to epic proportions and spending like drunken sailors. Take care.